Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets. End of days trading, Monday the 22nd of February 2016. Okay, so quite a stellar day today. Certainly my analysis was wrong. I've been stopped out twice on the FTSE 100 shorts today on this Brexit concerns short trade, and it certainly seems to be overcrowded. Now, allow me to explain. As always, this video is being brought to you by CFDs.com, your trading specialists in CFDs. Alternatively, you can visit the educational site www.cfds.education to certainly learn more, and be sure to open an account and take advantage of that potential bonus that's on offer. Okay, now let's try and decipher exactly what's happening here in terms of the actual index itself. Let's start off with the FTSE because I think that's a crucial one, because the concerns going into today was all about Brexit. The FTSE 250 itself, as you can see, it was thrust higher. Quite an impressive thrust higher, although it is finding resistance now at this current juncture. We do have this horizontal resistance that's holding up here. On the daily chart of the FTSE 250, let's have a look. Okay, we are now coming into resistance, taking out a downward sloping trend line. So first of all, let's try and understand exactly the actual version of events. We had the Asian markets higher overnight. PMI data out of Europe certainly came in mixed. Certain German and French PMIs certainly came out relatively weak, and the Eurozone PMI certainly came out weak as well. But that failed to deter the risk on rally or risk on sentiment. Even the UK data, CBI Industrial Trend Survey, certainly came out negative. Now, Chicago Fed, national activity came out strong, but the US PMI certainly came out weak as well. And yet again, it failed to cause the markets to sell off or go into a risk-off mode. So it certainly seems like the risk on or risk embracing risk certainly was in full swing today. A lot of that may well be put down to the fact that the yen itself has held that potential double top resistance and obviously had flushed ever since. Although we are now catching a bid on the yen, and you can see that the US markets are certainly coming in. Now you have the unfilled gap left above, and that, all eyes will be on that gap. Now the Nikkei was certainly higher, but not substantially. Nothing substantially higher. I mean, yes, we had a green day on the Nikkei, a bullish day, but nothing overtly bullish. If anything, it's still consolidating below previous support equals resistance in this zone here. So nothing overly substantial now. The Shanghai, yes, we certainly pushed higher on the Shanghai, so certainly a bullish move there on the Shanghai. But in essence, really, it's lower lows and lower highs at this current juncture. So until we go ahead and close this gap and start to trade higher, it certainly remains bearish at this current juncture. So again, all eyes on the Chinese markets. Now, the biggest fear this morning was Brexit and the uncertainty regarding that as well. It certainly has been the problem certainly has been exacerbated with Prime Minister's question time, given the fact that Mr. Cameron had a go at Mr. Boris Johnson, and certainly his backbenchers, a lot of them were quite vocal as well. And it basically thrust the uncertainty back into the forefront. So what will happen in the event of a potential Brexit? And the Brexit reality certainly materialised. So that certainly remains comes to the forefront. Now also we have the concerns with regards to Apple and the Apple taking on the US government with regards to its privacy, etc., etc., and the implications that could have on Chinese and its Chinese market and Chinese growth. So that certainly is another factor to take into consideration as well. Also with regards to the actual Euro USD in terms of the European trade, Euro USD now on the daily chart is now coming into previous resistance equals support. Certainly is looking to push potentially higher. On the 60-minute chart, it certainly is building a base, no lower lows, lower highs. 10-minute chart as well is looking to make an inverted head and shoulders formation, looking to move higher. Now that certainly is supported by the chart of the bunds. If you look at the chart of the bunds, it certainly has held resistance on the bunds, and certainly is looking to potentially move lower, especially given the fact that the daily chart is a key topping tail and certainly is indicating lower prices on the bund. So bund goes lower, euro goes higher, and we all know what happens when euro USD starts to move higher. That certainly, or euro itself starts to move higher, it's risk aversion for European equities. So whether or not I've front run that to a large extent and got in a bit too early in terms of my short position is yet to be seen. Now the US markets, as I speak, are still holding that gap level or that horizontal resistance zone. If I bring up the chart of the S&P 500, and demonstrate to you. Let's bring a chart of the S&P. Bear with me. Here we go. S&P 500. So 60-minute chart, you can see that we are holding that horizontal resistance, which is seen at 1947. We've certainly closed the gap now on the actual S&P 500, and that resistance at 1947 remains the key and the crucial component in terms of the next risk in this trade. Okay, so gap fills below, that certainly needs to close. Go to a 10-minute chart of the S&P 500 and start to look for potential clues here. The only one that we can certainly focus on for now is that gap fill below, and there's your gap level. Okay, you could have horizontal previous support equals resistance in this region here. If we do come down below to test, this is going to be an important zone here and an important zone here. So again, all eyes on that zone with regards to the next move in this marketplace. Okay, so as soon as we break this resistance at 1940, then that certainly does open up the levels below, which I've highlighted at 1930 down to 1925, and then eventually looking for gap fill support. So all eyes on that gap fill zone below on the S&P 500. It certainly seems to be exhausted on the 10-minute chart too. So all eyes on that as well with regards to the potential next move. Okay, so S&P 500 is certainly indicating weakness. Let's go over to the NASDAQ. Certainly is another important index to observe. See if we have the NASDAQ in amongst this. Okay, here we go. NASDAQ diagonal trendline resistance. 60-minute chart at the moment. It certainly is in no man's land, the 60-minute chart. Although it is expected to be weakness given the fact that the VIX is obviously into support, and that certainly seems to be crucial. Now again, bear that in mind, Euro USD is into support and looking to move higher, and that will be obviously bearish for European equities. Now let's bring up the chart of European equities. The daily chart of Euro stocks has broken out this bearish channel, but it still remains below that fib 75% resistance, so therefore I'll remain bearish until then. If you take out the fib 75%, then the next stop is 3050. And then you have 3140 with regards to the next move in this marketplace. The 60-minute chart, the Euro Stoxx is holding that key resistance zone. So you have resistance from 2930 up to 2950, 2960, and that will be the key zone to watch. If you take that out, then you are looking at 3050 coming back into play. Okay, now let's just cross-verify that with the S&P 350. You're still in that bearish channel, so certainly needs to be respected. You have the Stoxx 600 as well, looking at the Stoxx 600 on a daily chart. And you're still holding that diagonal trend line, so therefore still looking at a risk off trade. Okay, now let's bring up the chart of the German DAX, holding the resistance at 9580. Quite an impressive thrust. I mean, that is one hell of a move from the pivot low of 9390 up to 9570. That's almost a 200 point or 200 pip move on the German DAX alone. Previous support equals resistance around that region, so say looking to hold. And the daily chart of the German DAX is into that fib 75% resistance near that 9600 zone. If you take that out, then you are going to 9800 to 10,000, and that will be the next level in the German DAX itself. Okay, FTSE 100 is key. It's still holding that key diagonal trend line, therefore remains bearish. We did attempt this bull flag here on the back of higher oil prices, etc., and it certainly seems to have failed due to the Brexit concerns dominating. Okay. Resistance above is seen at 6080, and then obviously looking at 6125, and they will be the two zones to watch. Very unlikely for us to break above that given the uncertainty regarding Brexit. Very, very unlikely unless oil certainly makes a significant move higher. 60-minute chart, you can certainly see resistance in that region at 6060. I stopped out at 6061, unfortunately. Okay, so the next resistance 6080, then obviously 61110 or 6112. Okay, so that's the zone that you'll be looking at with regards to the FTSE. Now, hypothetically speaking, you do have this H&S formation on the FTSE 100, so certainly keep an eye out for that. Any pop high up to the 6050 will be an area for me to potentially short this market, and it's a zone that I'll be watching very, very carefully. Okay, and looking for further weakness down to the potential 5990 zone, and eventually the gap fill at 5940. Then we'll see exactly where the market moves from there. Okay, I think that's a market wrap in terms of the summation of European indices. Watch out for the potential move in the euro, which in turn should send the markets lower, and like I said, the bias remains bearish due to Brexit concerns coming to the surface. Now you can certainly see euro, the price of Brent crude, certainly coming into resistance as well, which is bearish for the FTSE, and therefore looking for a potential move lower, especially given the fact that the Nikkei certainly was weaker overnight. Okay, now I will look at the mining sector as well for you, because this was what led the FTSE 100 higher today. Quite a stellar rally. I mean, it's taken out that horizontal resistance here. The next resistance is seen above at the 9,000 level on the daily charts, especially even with the potential talk of a dividend cut by BHP Billiton. It certainly has not unfazed the mining sector, and certainly has kept it afloat, and certainly has propelled it higher. So again, quite an impressive thrust, especially given the fact that we've been in a downtrend, quite a vicious one of that as well. Okay, looking at the actual financials as well, let's just bring up the sector indices before I finish. FTSE 350 oil and gas certainly is holding that resistance zone on the 60-minute chart, double top. So all eyes on that double top level. Okay, so with regards to the price of oil, now that is a zone to watch out for. Okay, and looking at a daily chart, and you are into that zone, so horizontal resistance, okay, on the price of the oil and gas companies with regards to the FTSE 100. If that resistance were to go, then you are looking at 200 MA next on the FTSE 100 itself. Okay, looking at the European sector, looking at the FTSE banks as well, certainly remains weak with HSBC today. The financials, yes, you do have the unfilled gap below that needs to be filled, hence looking for this inverted head and shoulders formation to eventually play out. But first of all, given the HSBC bad loans increase, that will certainly hurt the financial sector to a large extent. Energy certainly is holding that key diagonal trend line, looking for a potential thrust lower before we attempt to certainly mount a move higher. So certainly weakness before the potential rally that's going to ensue. Okay, for now. Right, so all eyes on the energy sector, all eyes on the banking sector, and that will be the next momentum, or the next move in this market will be seen from there. So all eyes on those potential zones. Now Deutsche Bank is still holding into resistance and holding resistance, and whether or not it will trade sideways or potentially make a new high is yet to be seen, but we shall let the market dictate. Okay folks, I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.